Hi guys, my name is OP, a prop trader from Hashedge, and we are here every day coming to the market, paying attention to the market, here to give you the daily analysis of the market structure and the price action. And we'll just jump straight to the charts, looking at the Bitcoin USD perpetual on the Hashedge platform. You can see we are just range bounding at 84,700, and we are here to make a decision. We are just range bounding, like I said, and we are just pretty much headline driven. Based on everything going on in the headlines with Trump, the tariffs, Fed President Jerome Powell, and that is giving us determining what the market structure is looking at. As we can see with the trend line above, we are still above the trend line, so we are looking good, but it's still lackluster movement, and we don't know what we are doing right now. We are here to make a decision, either long or short, so we don't know. All we just do as traders is to watch the direction of the market, let this market speak to us, and it appears to be slowing down. Honestly speaking, looking at the market structure right now and the price action, it appears to be slowing down. Is not really giving us anything to work with. So the best thing for now for traders is to manage our risk and just to watch, sit on our hands, and let the price action come to us. Like I said, looking further at Solana USDT, we look to be above our support that we have drawn, and looking to go to the upside. So we look until we cross a $150 structure support, and we confirm that support, we might be going up. But in general, because Bitcoin is the first mover and is the godfather of all the cryptocurrencies, so Bitcoin kind of sets the tone for every single thing. So once Bitcoin is really not moving, you can see across the board everything is not moving. Everything just seems to be range bounding, just like what Bitcoin is doing. Looking at XRP, same thing, similar to right now we are at $2 with XRP. Looks like even we might be heading further downwards movement, so we'll be looking for a downwards movement up to maybe like $1.09. So pretty much everything, sentiment is actually bearish right now. It's still fear as at yesterday, so everything is just based on headline news. Like I just headline, and everything is based on what is going on with the Fed President Jerome Powell, his speech yesterday and his comments made yesterday, which wiped 1.5 trillion from the stock market. From the stock market yesterday, and that's wiped 1.3 from the stock market yesterday. And yeah, it was just a really bad shit show, really, and everything is just showing off. It's very obvious with the Trump tariffs, everything. Jerome Powell, looking at this funny gif and funny image that was shared all over Twitter. Jerome Powell seems to hold a lot of cards, a lot of aces up his sleeves. China's President Xi Jinping also has a lot of aides, but they are holding on, while Trump seems to be in the losing side of this battle. So this is what we are watching. You can see even Chinese embassy has been trolling Trump on Twitter, and it says the art of the deal, and yeah, over the tariff prophecy, because pretty much it's just a shit show. Every day Trump has been increasing the tariff percentages, and just yesterday again he increased another the tariffs to 246%, which is just ridiculous. So China is now actually pivoting and is now settling purchases, cutting US purchases by 90%, and is now importing record amounts of Canadian oil, which is like a slap in the face of Trump and everything he's set about to do. So all this is saying bad policy, and is giving a bad face to Trump and what he's setting about to do. And of course, it will obviously affect the market, because the market is uncertain. The market doesn't like uncertainty, and right now we are in the period of uncertainty, and Trump keeps dilly-dallying and changing his mind. And of course, everybody will be cautious to enter risk right now. So this is what is going on. Just listening to what federal, just on the bullish side, a little bit of bullish opium for us to just have, instead of everything being doom and gloom. Fed Jerome Powell saying crypto is much more mainstream. So let's just listen to his speech.
Conservative perspective on how, so we went through a wave of failures and fraud and things like that, were the headlines for a couple of years, and I think what you see now is, and during that period, by the way, we worked with Congress to try to get a legal framework for stablecoins, which would have been a nice place to start. We were not successful. I think that the climate is changing, and you're moving into sort of more mainstreaming of that whole sector. So Congress is again looking at both the Senate and the House are looking at a framework, a legal framework for stablecoins. You know, depending on what's in it, that's a good idea. We need that. There isn't one now. And stablecoins are a digital product that could actually have fairly wide appeal and should contain consumer protections of the typical sorts and transparency. And that's what the Senate and the House are working on. So that's a positive thing. I also think some of the, you know, we took a pretty conservative, and other bank regulators took an even more conservative perspective on the guidance and rules we imposed on banks. I think there'll be some loosening of that, and I think we'll try to do it in a way that preserves safety and soundness, but that, you know, permits and fosters appropriate innovation, but that does so in a way that again doesn't put consumers at risk in ways they don't understand or make banks less safe and sound.
So it's quite interesting. Is pretty much saying they are going to be they are at the stage where they will be loosening legislation and policy around stablecoins, the use of stablecoins, of course, protecting consumers and protecting retail for the use of stablecoins. So once, of course, we are talking about a bullish stance on stablecoin, we are pretty much talking about cryptocurrency. So that is bullish for cryptocurrency. Let's listen to what Michael Saylor is giving us, of course, our daily hopium on Bitcoin, and listen to Michael Saylor, of course, the CEO and founder of MicroStrategy.
In the intro, now worth around $10 billion. You have paper gains of about 70% or so, which a lot of people would like to see that sort of return. At any point, would you sell? When would it make sense to take profits there?
Well, I've famously said I'm going to be buying the top forever. Bitcoin is the exit strategy. It is the strongest asset. So what we see right now is that Bitcoin has just emerged as a $1 trillion asset class. And it's alongside names like Apple and Google and Microsoft. But the difference between Bitcoin and the Magnificent Seven is Bitcoin's an asset class. It's not a company. There's not enough room in the capital structure of those companies to hold $10 trillion or $100 trillion worth of capital. So Bitcoin's competing against gold, which is 10x what it is right now. It's competing against the S&P index. It's competing against real estate, $100 trillion plus asset class as a store of value. So we believe capital is going to keep flowing from those asset classes into Bitcoin because Bitcoin is technically superior to those asset classes. And that being the case, there's just no reason to sell the winner to buy the losers.
Let's talk.
It was quite interesting, and you know our bullish opinion, like I said, there's no reason to buy to sell the winner to buy the losers. Bitcoin is the exit strategy. Bitcoin is our hedge against fiat currency, dwindling fiat currency, and fiat currency, we all know this, is debt right now, and all paper currency is not worth anything. It's not even worth, you know, the toilet paper. So this is where we should be. This is where we should be positioning ourselves. Us as traders, we are reminded we always still. We can use this, we can trade our way to the top, and that is what we are trying to do. Zero Ferrari until we get to our Ferrari. That's when, even it doesn't stop, even after we get our Ferrari, we just push out to the end, and we are trading until we become millionaires. I spoke about this, but just going again on Fed Jerome Powell, Fed President Jerome Powell, it is quite interesting, and for us to pay attention to what is happening on the macro front, because the macro front, right now we are heavy on headlines, and we are headline driven across the board. We have to pay attention to what is happening on the macro side, because the macroeconomic side, because that sets the tone for everything and sets the tone for geopolitical events and the economy at wide. So it's quite interesting. I know we don't want to pivot too much and focus on the economy, but it is important for us to pay attention to what they are saying, because that is what is driving markets right now. That's what is driving risk and inflation, and we have to really pay attention to it. Let's just listen to what his comments yesterday about if when he was asked if the Federal Reserve will intervene when the stock market collapse.
Some volatility, especially stock market volatility. I mean, the levels of the VIX are up to the levels they were in the early days of the pandemic, coming off somewhat now. Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on, and it's really the policies, particularly the trade policy, and really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning. Conditional on being in such a challenging situation, markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
So it's quite interesting to listen to what he's saying. Markets are doing what they are supposed to do. Of course, there are many uncertainties, but he has taken pretty much a very strong stance, which is obviously very hawkish, and that is telling us a lot of what he's doing. He's not appearing dovish, and there's a lot of prediction markets that are already have eased up on how many rate cuts there will be this year. Of course, with rate cuts, when there's rate cuts, that means that's a dovish outlook, and that means they are sending the quantitative easing is in play, and that means there's going to be pumping of much more liquidity in the market. But a hawkish stance is the opposite, meaning they are going to pull money out of it, make interest rates much more higher and much more difficult and much more expensive to borrow money in existence for people to use. So this is the stance they are taking, which is hawkish, like I said, and yeah, he's pretty much taking, and it's quite pivotal and quite interesting to see at this current moment where the Trump on one hand wants the Fed to ease markets, to pump much more liquidity into the markets, but the Fed president is actually saying no and putting a bold front and standing and not listening to what the president is saying. Then again, you couple all of this macro uncertainty with now another geopolitical mix, which is China, the tariffs. Also, it gives a quagmire and a salad bowl, of uncertainty events that is playing out in the markets. And of course, you can see it with $1.5 trillion wiped out in the market over the past days or months, you can say. And right now, again, uncertainty, everything is just, sentiment is pretty much in the toilet right now. Then you can see with the Kobayashi letter is saying global investor sentiment has fallen, and it's the lowest since October 2023. We continue to watch shifts in both near-term and long-term sentiments as leading indicators. And as you can see right now, with the Trump trade war 2.0 trade war, sentiment has dropped really, really bad. And this is just saying what is going on and how everything is not showing. It's not giving us positive, not positive sentiment and not more positive. And you can see also in the direction of the market. The market doesn't know what to do. There's uncertainty. The Bitcoin is just range-bound because there's no clear direction. Nobody knows what to do. Nobody knows whether to be risk on, risk off. And yeah, it kind of makes us bored. Is boring because we want to always know, as people, we want to always know what direction we are going to, whether we are going up or down, and we follow through with that. But right now, it makes the market boring. It makes even me reporting this, the daily analysis, kind of boring and nothing to really report because there's nothing that the market is actually saying at the moment. We look at Bob Lucas also tweeting how gold has just been, skyrocketing and just been going all-time high after all-time high after all-time high. Why is this happening? It is quite simple and easy because gold is considered as risk-off environment, and everybody, when there's uncertainty in the markets, when there's like what we're seeing right now in the market, like I reported, what we are seeing across the economy, the global economy, everybody is rushing into gold because gold is considered a safe haven. Of course, we know that every lot of people are positioning Bitcoin and championing Bitcoin as digital gold, but we are not there yet. It might take a few years. Who knows how long it will take for Bitcoin to get to that point where Bitcoin to be considered as a risk-off assets and or risk of investments. But right now, Bitcoin is still in the basket of risk on. So that's why we are seeing everybody pile it into gold and trying to just make sure like they're out of risk right now and they are safe with their currency. just to end our whole market analysis and technical and fundamental analysis of the markets in general, and obviously hone down back to Bitcoin and cryptocurrencies, which we are interested in. We look at his speech, again his speech, Federal Reserve Chairman Jerome Powell, talking about the level of tariff increase that has also affected global markets.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth.
So he's literally saying it like he's really calling it out what is going on. The level of tariff increase, it is something not anticipated, and of course it's going to affect inflation, and it's going to, at the end of the day, who is going to suffer this? Retail and the consumer. The low man on the streets is going to suffer all of this, because when the tariffs are increased and when there's tariffs in the market, the companies and the producers coming from China are really not going to get affected, because they are going to put the prices, they are going to cost the tariffs, the tariffs that they have to pay, they will put it back on the prices of the products. So ultimately, the prices of products that you are going to get all over the world is going to increase, thereby driving inflation. And of course, consumer sentiment, again, you see the loop effect. Consumer sentiment will be low, and everything is kind of like a ripple effect, and it kind of affects everything. We just go back, ending this video with Bitcoin analysis, and just to reiterate what I said earlier, Bitcoin is still range bounding, not giving us a clear direction of what to do or what it's going to do. Range bounding, just within this range, just moving, makes it lackluster, boring market. But again, I just emphasize that what we should do as traders is to just watch. Not every time we should be trading, not every time. That's why it's good for us to pay attention to the market and do market analysis every day, so that it gives us a sense of what the market is saying and what the price action is saying. And that informs us whether to take a direction or what to do at the moment. And right now, like I said, what to do is just to sit down, sit on our hands, wait for the market to come to us, and then we act immediately and decisively, and we take advantage of the movement, either long or short, whatever the case may be. We are here to make money. Zero to Ferrari. See you tomorrow. Bye.